All right, let's talk about Kaynes Technology. Now, you might know them as a big name in India's electronics manufacturing scene, but today we're going to look beyond just the latest quarterly numbers. We're diving deep into their long-term vision. And believe me, it's a strategy so ambitious it could totally reshape the industry. So, let's get right into it. So, to really get a sense of where Kaynes is heading, you first have to understand just how big they are right now. Check this out. Their order book is a whopping 90,000 million rupees. That's over a billion US dollars. I mean, that's not just a number on a spreadsheet, right? It's a huge vote of confidence from the market, signaling massive future demand. Their core business is obviously humming along, which kind of begs a question. Why have some investors been getting a little frustrated? And this, right here, is where things get really interesting. Management, and specifically the executive vice chairman, Ramesh Kannan, they're not shying away from this. He's basically saying, yeah, we get it. We know this has tested your patience. They're acknowledging that turning all that potential into actual results has been a challenge. And, that kind of honesty is what sets the stage for a really big strategic shift. So let's unpack what's been going on. Okay, first up, let's take a look at the current picture. It's a bit of a tale of two cities. Fantastic growth, bumping up against some, let's call it friction. Okay, so what's wild is that even with these bumps in the road, the company's fundamentals are absolutely rock solid. I mean, look at these numbers for the first 9 months. Revenue is up 37%. Operational EBITDA, that's jumped an incredible 55%. And their margins are getting wider, which is exactly the sign of a healthy, growing business. So yeah, the engine itself is running great. So what does management say about all this? Well, they're calling it a phase of consolidation. And look, that's not just some corporate buzzword for a slowdown. Think of it this way. They're taking a moment to reinforce the foundations before they build a skyscraper. It's all about getting ready for the next massive phase of growth. Right, so what were these hurdles exactly? Let's dig into the specific challenges that created that gap between the massive order book and the quarterly results. And this is really important. These delays weren't really about Kaynes dropping the ball. It was more a mix of outside stuff and some smart strategic calls. You had things like customers needing to get their own ducks in a row. Then there was the usual waiting game for agency approvals. A big one was the railway's Kavach safety project getting pushed back. And get this, in some cases, Kaynes chose to delay things themselves so they could upgrade designs for better performance down the line. A classic short-term VIT for a long-term win. Now, all of this had a bit of a knock-on effect on the money side of things. See, to make sure they were ready to go the second their customers gave the green light, Kaynes went ahead and built up a bunch of inventory for these special custom orders. That meant their working capital went up for a bit, but it was a totally deliberate move. They wanted to be poised and ready for the big ramp up. And this is where we get to the heart of the story. Because now that they've navigated those short-term issues, the company is making a huge fundamental pivot, a pivot toward the future. This right here sums up the whole strategic shift perfectly. In the past, Kaynes was an EMS provider, an electronics manufacturing services provider. Basically, they assembled stuff. But the future? Oh, the future is all about backward integration. That means they want to control the whole value chain. They're not just going to be assembling parts anymore. They're going to be making the most critical, most valuable components themselves. It's a total game changer. And management is being crystal clear about this. This quote says it all, doesn't it? That phase of consolidation, of getting things realigned, it's done. It's in the rearview mirror. The focus now is 100% on execution and making good on their big ambitions. So, you're probably asking, where is all this future growth going to come from? Well, it's going to be fired up by two brand new growth engines. And they're both perfect examples of that backward integration strategy we were just talking about. First up, OSAT. That stands for Outsourced Semiconductor Assembly and Test. It's basically the final supercritical step in making a computer chip, turning those big silicon wafers into the tiny finished chips that power, well, everything. And the huge news here is that Kaynes' facility for this in Sanand is now up and running. They've got the government approvals. This has officially moved from a plan on paper to a real working operation. And the second engine? That's HDI PCBs, or high-density interconnect printed circuit boards. Now, these are not the simple green boards you might be thinking of. These are the super complex, multi-layered brains inside really high-end electronics. And Kaynes isn't just dipping their toes in the water here. They are diving straight into the deep end, targeting the most complex, highest margin stuff for sectors like defense, aerospace, and strategic electronics. And listen to why this PCB strategy is so incredibly powerful. The company figures that for every 1,500 cores they invest, they'll make that back in direct revenue. Okay, fair enough. But here's the kicker. Making their own PCBs also unlocks an insane 13,500 cores in related assembly work. That's 9 times their initial investment. It's a massive force multiplier for their entire business. Okay, so how does this all add up? Well, these new growth engines are the building blocks for a super clear, super ambitious financial roadmap. The big goal by fiscal year 2028 is to hit $1 billion in revenue. And this isn't just wishful thinking. They've got a concrete plan to get there. They're projecting at least 1,500 cores from the OSAT business, another 1,000 cores from the PCB business, and then the rest will come from their core EMS work. It's a really calculated, diversified strategy to hit a massive target. And they wrap it all up with this final, powerful message of confidence. The time for setting the stage is over. The new growth engines are roaring to life, and the execution engine, as they put it, is firmly engaged. It's basically them saying, we're ready. Let's go deliver on this vision. Which really brings us to the big question, doesn't it? In a world where supply chains are constantly shifting, Kaynes is making a bold move. They're going way beyond just assembling things. They're taking control of the most critical technologies, from the chips themselves to the advanced boards they sit on. This isn't just a strategy for their own growth anymore. This is about positioning themselves right at the heart of India's biggest tech ambitions. So the question we're left with isn't just about whether they'll hit their next quarterly target. It's much bigger. Are we watching Kaynes Technology build the future of Indian electronics right before our eyes?